Assalamu alaikum everyone. I hope you are doing fine and everyone is well. I'm back here with another discussion of accounting information system, that is business processes. I'll be discussing this topic in two parts. So this one is going to discuss part one, where I'll be discussing the two major business processes including sales and purchasing, and the later part will cover some more important business processes. Moving on towards the outline of this topic, so we will have from the accounting perspective a discussion about what are the fundamentals of business processes, and then in accounting we'll be discussing the whole accounting cycle. We will also see what is the collection and the reporting of accounting information required for these systems. Then the two major business processes, as mentioned before, the sales process and the purchasing process, we will be discussing with respect to systems. And then finally we will be discussing some of the current trend in the business processes. Moving on towards the fundamental business processes fundamentals. So if you talk about accounting perspective, so in accounting we are supposed to use the following accounting cycle, and all accounting is based on this accounting cycle, which includes each and everything relevant to all the branches of accounting. So basically it starts from the journalization, or the journal entries you can say, or the general journal, that we record whatever economic event. Economic event means the event which affects the financial statements of the companies. So it starts with the recording of the economic events. Moving on towards the posting of those events to the relevant ledger accounts. In financial accounting we discuss in more details what are journals and ledgers, and then moving on towards from these ledgers we prepare the trial balance, and the trial balance is the base for preparation of the financial statement for the companies. So let's talk about what is general journal, or what is a journal. So basically journal is a chronological record of the business events. When I say chronological record, I mean that in you can say in a systematic way, as they appear in a sequence, as they appear we record these business events. But these business events should be in economic term, they should have some dollar values, and they should be affecting the financial statements of the companies. Journal is of two categories: general journal, and the other one is known as the special journal. If I say general journal, it's one journal which record each and every type of a business event. It could be relevant to sales, it could be relevant to purchases, it could be relevant to the share issuance, it could be relevant to the credit sales or credit purchases. So each and everything is recorded in one book, that is the general journal. But when we have particular types of journals which covers the special types of transactions, we call them special journals. So since I'm talking about special journals, so we should know what are the types of special journals. So here are some types of special journals, starting with the sales journal. Sales journals keeps the record, or it records the credit sales transactions. All those sales which are on credit basis, they are recorded in sales journal. Followed by the purchase journal or purchases journal, so it records all the credit purchases transactions. If I talk about the cash receipt journals, so it includes all those transactions which brings the cash for the business. It could include cash sales, it could include any other types of sales, or any other sort of revenues for the companies which are based on the cash. So it records all the transactions which involves the receipt of the cash. If I talk about cash disbursement journals, so as its name says, that disbursement of the cash, wherever you are using the cash, all those transactions are recorded in the cash disbursement journal. So these are the four basic, you can say, the types of the special journals. Moving on towards the ledgers. So when we talk about ledgers in accounting, we use another term for these ledgers, that is known as posting. So all the journal entries which are recorded in general journal or special journal, they are backup by the ledgers. So the journal ledgers, they contain the detailed monetary information, and each ledger, it represents a particular type of asset, liability, owner's equity, or you can say revenues and expenses. So for example, this is a structure of one of the ledgers. So if we say this is, let's suppose, cash ledger, and in the books of companies, or you can say in the chart of account of the company, the number or the sequence number assigned to the cash account is, let's suppose, 120. So the ledger will have the date column, it will have explanation column, it will have a reference means the number. Like cash has the reference, is it just like that other accounts also have a sequence number or a reference number that will be mentioned here. Then the debit column, then the credit column, and there is a total column as well. This what we study in financial accounting. Now, why I made this structure for you, in a few minutes it will be clear to you. So it includes the assets, liabilities. So each ledger represents one item from the financial statement. So this is the cash ledger. We will have different ledgers for each and every type of liability account, each and every type of owner's equity account, revenue account. So we cannot club them together. So what is chart of account? Chart of account has a strong relation with the ledgers because it contains the list of all the accounts used by the companies. So as I said, the sequence number or the serial number assigned to the cash is 120. So in chart of account, all the accounts are mentioned and they have a particular number for them. Let's suppose this is cash is 120. This is accounts receivable is, let's suppose, 125. This is common stock, let's suppose it has a number of 700. So the chart of account is a list of all the accounts of the companies or all the accounts used by the company and with their allotted serial number. So basically this chart of account is the you can say document which provides the structure for these general ledgers. Also in chart of account we utilize the concept of block coding structure that I'll be explaining you in a while, but do remember that is relevant to the chart of account. Let's move on towards what is a trial balance. So trial balance is the document which is prepared after the posting or after the ledgers of all the accounts are being prepared. So basically it is the listing of all the accounts with their final balances. Are they having debit balance or the credit balance? Basically it contains all the assets first, followed by liabilities, followed by equity accounts, followed by revenues, and followed by expenses. So in trial balance, all these accounts along with their final answers, where final balances are being mentioned. When do we prepare the trial balance? So if we talk about normal accounting cycle, so for the manual preparation, there are basic 3 times when we prepare the trial balance. So when in journal entries are recorded and after that they are posted in their ledger accounts, then we prepare the trial balance. Then at the time end, or you can say accounting time end or accounting period end, in order to close our books, so we do adjusting entries. After the adjusting entries, we post these adjusting entries and then we prepare adjusted trial balance. That's the second time. And then after preparing the financial statements, we perform the closing entries. So after closing entries, and we post them into the ledgers, and then we prepare post closing trial balance. The post closing trial balance has only assets, liabilities, and equity account, because it does not include the temporary accounts which are revenue and expenses, because they are closed in the closing entries time. So these are the 3 different time spans when we prepare the trial balances. Moving on towards what are the financial statements. So financial statements are basically the final output of the accounting information system or accounting system, because we keep on entering the data and the results which we want, that is the preparation of the financial statement. So 4 main statements are required: income statement, balance sheet, owner's equity statement, and the statement of cash flow. So this is the accounting cycle which I just discussed few minutes back with you. So firstly we do journalization. Those journal entries are posted into the ledgers. Ledgers are used to prepare the first time trial balance, or you can say unadjusted trial balance. Then we record the adjusting entries and we post them into their ledgers, and then after that we prepare adjusted trial balance. Then we prepare the financial statements. After preparing the financial statements, we prepare closing entries and we post them into their ledgers, and then we prepare post closing trial balance. So this is the complete accounting cycle which keeps on repeating itself. So a few minutes back I told you about what is chart of account, and there I gave you a concept of block coding. So let's take it in more detail. Basically this coding or the chart of account, it becomes very important when we talk about accounting information system. So the codings, the numbers of these accounts is too much important for accounting information system, because this coding is used for the recording of journal entries and recording of all the data, to store it properly, to classify it properly in its account, and to retrieve the required information whenever it is needed. So this coding, I was giving you an example of 120, 125, but in reality we not only have numeric coding. For some accounts we also have alphanumeric coding, like for a journal ledger account GL180001, for example. This could be a code, and this one is the numeric and this is alphabet. So this is an alphanumeric code. Some codes are only numeric. So this designing of chart of account in an appropriate way, it's very important if we want to implement the system properly. So when we are designing these codes, the codes should serve a useful purpose and they should be consistent. When I say they should serve a useful purpose, it means that the codes are there, that they can be used for the implementation purpose. And when I say consistency means that all the, let's suppose, assets accounts, they should be in the same range. Like if cash is 120, accounts receivable should be 100 and something, let's suppose 125. Prepaid expenses codes should be from 100 and you can say 147. So all of them falls in 100 category because they all are assets. So there should be a consistency. And when we are designing these codes, we should take care about the future expansion. That, like, let's suppose right now we are maintaining only one account of cash, but in future maybe we want to maintain our all the cash accounts separately. What does it mean? It means that cash in hand, then cash, you can say the checking account in the bank AC means account in the bank A, then checking account in the bank B, checking account in the bank C. So our checking account or our current accounts. So now I need four codes. So I keep a margin, like 120 was the cash account, 125 was the account receivable. Why not 121 for accounts receivable? Because we plan for the future expansion, so we keep the margin over here. Now 120 will be the total cash account, 121 could be the cash in hand, like this. 122 could be here, 123 for the checking account be 124, because we plan for the future expansion. In future we might need more cash accounts. So when we are designing the coding, we keep a margin for the future expansion sake. Now let's see some more details about this coding. So for that purpose, let's have a look what are the types of the codes. So basically there are four types of the codes, starting with the mnemonic codes. When I say mnemonic codes, I mean that they should help the user in remembering that what these codes represents. Like few minutes back I gave you the example of all the assets accounts with 100, so one will remind them that it's an asset account. Then there should be a sequence. Let's suppose if we are giving account cash account as 120, and at that time company does not have any dealings in the credit sales, but after 5 years, company started dealing with the credit sales. Now they need an account for the accounts receivable. That's also an asset, but for example all the 100 accounts are booked, and now we are assigning account receivable after 5 year a code of 700. It doesn't show consistency, right? This starts from 7, this starts from 1, this is an asset, this is also an asset, so the sequence should be there. That's why we keep the future expansion in our mind when we are designing the chart of account. And then the block codes is from the sequence of the codes, that they should be in sequence. So how could we do that? By reserving these codes for the future expansion sake. So for specific purpose we block some codes. So this is the concept of block code, that they are sequential codes which we block, then we reserve them for the some specific purposes. Then group codes, as its name says, that this is is made by combining 2 or more subcodes together. This is the example of the block code. If you can see over here, we have designed that from 100 till 199 all the current assets accounts will be there. And if you see, we are having a margin. Cash is 100, but marketable securities are 110. So what is in between? That's future expansion. We are blocking them, right? So this is how we design them. Moving on towards collecting and reporting accounting information. Now when we are talking about system, so we have to enter the data, then system will be able to generate our required results, which is in form of financial statements or different types of reports, right? So when we are designing it's the system, it's very important to make sure that the design should be effective, and the system should be capable of generating our required outcomes or outputs, means whatever expectations the user have about the output, system should be able to generate that. Usually which type of outputs we require from the accounting information system? So management needs different variety of reports. We need reports for the investors and the creditors as well. Like might be bank wants a particular quarter information about our credit or pending credits or our outdated payables. Then files retaining the transactions are also one of the output, and also we want some current data to be kept properly. So we files which are having the current data about the accounts, that are also required from the accounting information system. These are some limited you can say names. If I say reports to the management, there are hundreds of reports which management want. Reports to investors and creditors, there are many reports which investors and creditors we have to prepare. So all those falls under these outputs, but we just name them in a summarized way. So when you are designing your accounting system, at that time you have to make sure that what output your user wants, and outputs, as we just saw before, that different types of reports we want. So in that case, those reports formats, their templates we should design in the system, so that they look or you can say they can meet the requirement of the customer or the user. So when we are designing these reports at the time of implementing or at the time of preparing the system for use, at that time we should make sure that it meets the characteristics of a good report, the design. What does it means? It means that it should be easy to read and it should be useful. So the convenient and the useful format is needed. Also, it's easy to identify and it's consistent. So when I say identify and consistent, so I mean to say that it includes proper headings and the page number, so that we can identify this report is relevant to which time and what are the parts of it, how many pages are there. and the proper date should be there, proper heading of the reports should be there. And when I say consistency, so consistency means that over time, means if I'm printing the report today or I'm printing the report after 1 year, the consistency should be there, the format should look similar, only the numbers should be different. And across the departments and the division level also the reports should look similar, and also they should be according to the journal accounting practices. So these are the requirements for the good looking, or you can say acceptable accounting reports which are useful for the readers. Now it's the time to enter the data in accounting information system. So we don't enter the data without having some knowledge about that data. So let's suppose if a colleague of you tells you that we sold the goods of $10,000, you will not start entering $10,000. You need evidence, you need a source document to enter the data. So source document are the one who manages the flow of accounting data. They help in dictating or you can say the properly entering of the data in the system which is collected. It also makes sure, or it encourages the entry of complete data into the system, because everything is written in the document. So that's why. Then it's this source document is the distributor of the information, and if auditors wants to check that the data entered into the system is correct or not, this document will be used as a verification source. So it establishes the authenticity of the data. Nowadays source document term is very common and it is used in accounting information system, and now because of the green finance or green accounting, paperless technology is there. Paper are no more encouraged, so these source documents are mostly now on electronic forms in form of emails or some letters. This is the example of one of the source document. This is a sample purchase invoice. You can see the name of the supplier and the price, unit price, quantity, everything is written on it. This is a sample sales invoice. The seller is issuing this. So the main theme of this chapter is business processes. So as I mentioned before, we will be talking about some business processes here. So what is the business process? Business process is the set of all those activities which creates the value for organization, and they are connected activities. So accounting information system collects and reports the data related to these business processes. When I say set of activities, so we in the business, we do have economic event, we have business events. Economic events are those events which affects the financial statements, and their effects are shown in the financial statement. Business events are those events which affects the business, but currently they are not affecting the financial statement. Maybe in the future they will become the economic event, and then they will start affecting the financial statement. So economic events are the one which we journalize, which we record in the system. Let's move on towards our first process, which is the sales process. So when I say the sales process, this is the first one. So this process it begins when you get the order from the customer. So begins with the customer order, and it ends when you collect the money from the customer. So what are the objectives of the sales process? Number one, that we have to process this order, this sale, in a timely and efficient manner. And the primary second objective is that we should collect the money from the customer in timely and efficient manner. So these are the two basic objectives of the sales process, but there are many others, because those objectives we want the sales process to complete, and for that purpose we want evidences from the system. So proper reports or required data should be available in the system. So for example, relevant to the sales process, I'm interested in tracking the sales of the goods and the services to the customer. I want to see to one particular customer how many sales we did, or how many services we have provided them, or for all customers if I want to extract this report, I also want to file it's customer order. I want to enter it into the system. So filling the customer order is another objective of the sales process. We want to maintain the records of the customer in the system. That's another purpose, or you can say objective. We want to send the bill to the customers for the goods and services we have provided to them. We also want to collect the timely and efficient payment for these goods and services. And also, for the future expansion sake, we want to forecast, we want to plan for the future sales and their cash collection based on our current scenario. So these are some advanced objectives of the sales process. Now, a few minutes back, I told you that we need a source document to enter the data in the system. So those documents are known as input documents. So what are the input documents for the sales process? So the inputs for the sales process includes the sales order. Firstly, this order is created at the time of the sales, and we will be using this document to prepare the sales invoice. So what is a sales invoice? Sales invoice is another input for the sales process that reflects or that shows the information about the sales. When I say information about the sales, so it means that it includes what we are selling, what is the price of the thing which we are selling, and what are the terms, how, if it is cash or credit. If it is credit, is there any discount, how many days credit? All these details are mentioned in the sales invoice. And then there is one invoice known as remittance and invoice. So remittance invoice accompany, or it is with the payments. So some more inputs regarding the sales process includes shipping notice. Shipping notice is prepared when the storeroom or the warehouse send the goods to the customer. So shipping note is attached with that. The goods are the box of the goods, it has the shipping note in it, and it is prepared in multiple copies. So one copy is stored in the warehouse, the second copy is sent to the customer, and the third copy is sent to the accounts receivable department, which enter this data into the system. Debit and credit memorandum is regarding the damaged goods. So this memorandum tells us that how much goods return we got, and what was the problem, what was the reason for these return goods. So it identifies the problems or discrepancies, and how much money we have to give to the customer if we did the cash sales with him, and how many if we did the credit sales, then how much decrease in the accounts receivable we have to generate. So debit and credit memorandum helps us in fixing this. Now we talked about the inputs. Now let's move on towards the output. What is the resulting documents which we can print or we can generate as a result from the sales process? So the first output is of course financial statements. Financial statements gets affected because of the sales process. Revenue is there in income statement, accounts receivable are there in your balance sheet, cash is there in the balance sheet. So of course financial statements gets affected. Also the customer billing statements we can print, or we can generate from the system, which tells us customer wise how much invoices are still outstanding and how much each customer has to pay to us. So currently how much they on to us. We can also generate the aging report. Aging report is very important in preparing the allowances for the doubtful account or the bad debts records. So aging reports are basically it is a report which shows us the balance of each and every accounts receivable based on how old they are, what is their age. So how many accounts receivable are 3 months old, how many are 6 months old, how many are 1 year old, how many are 2. So like this the aging report tells us, because the accounts receivable which are oldest, either we have to write off them or either we have to prepare the highest bad debts allowance for them. So this aging report can be generated from the system, which tells us the outstanding balance of receivables based on the timings. Then we can also generate the bad debts reports, because we need to know that how many accounts receivable are near to
bad debts, so that we can start the follow-up procedure with them, or it helps us in manage our accounts receivable properly. Also, because the companies does the credit sales, so we can generate the cash receipts forecast based on the sales, that how much sales will be giving us money in the future. So all the pay receivables will be here, so we can just check in the future how much money we are expecting. And also aging analysis can also helps us in preparation of this. So this is all about the sales process inputs and outputs. Two more reports. Basically there are many, but two more are also here. I forget about them, so let's quickly review them. We can also prepare the approved customers list report. We can also prepare the blacklist customers or bad customers list report who did not make us the payments. We can also prepare the sales analysis report, which is helpful in decision making. So all the reports, all the requirements which are relevant to the sales, we can generate them from the system. So this is all about the sales process. And now we will be moving on towards the second process, which is purchase process. Just like sales process, this is one of the key process in the business. So it begins with the request for the goods and services, that how much goods and services we want from someone, or how much products we want to purchase. And when it ends, when we make the payment to the vendor, so the primary objective is that we have to purchase the high quality goods at the best prices, and we have to pay the vendor at the optimal time. Optimal time means that we try to take as much credit time as we can, but we always avoid to become a bad client for the vendor, so that we keep our relations with the vendor for the credit purchases. Now let's move on towards the some other objectives of the purchasing process. So we want to keep the track of goods and services which we have purchased from the vendors, how much amount we owe to them, we have to pay them. And then we want to maintain the vendor records. We also want to maintain our inventory so that we can do the timely purchases. Also, we want to make the payments to the vendors on time. And also we want to forecast the purchases and the cash outflows about the future. Just like sales process, in order to record the stuff relevant to the purchases in the system, we need documents, right? Source documents. So the inputs for the purchase process includes the purchase requisition. Purchase requisition is a request generated by the company to get the items from the vendor. So it identifies the items which we are requesting from the vendor, which from which vendor you want to purchase. It is followed by the purchase order. So based on this requisition, the order is generated, and it includes 4 more details about the vendor. And then the vendor invoice, it includes the price, shipping term, and the discount. There, just like we have sales invoice for the sales, we have vendor invoice in the purchase process. Followed by receiving report. Receiving reports, when you receive the goods at your company from your vendor, you don't just put them in the warehouse. You basically count them, check them, match them, so that you can find out that they are according to your request which you made to them. So you count and check the condition of the goods received. And then the bill of lading is the one which is along with these goods which are sent to you. And the carriers or the cargo assumes the responsibility for these goods, because if something happened to them on the way, that's the responsibility of the cargo. Packing slip is with the goods. It specifies that how much goods and the quantities are included in the box of the shipment. And these packing slips come with the goods which you are purchasing. Some more inputs about this is the example of the packing slip. It is with the goods. So now let's talk about the outputs of the purchase process. Of course, purchases affect your financial statements. Then the vendor checks, the another output which you want to generate from the system, that is how much money you are supposed to pay to the vendor. So you have to make the check for that. So is supported by a voucher. And because companies have signatories or designated management people who signs these payments checks, so it should be signed by the management. And then we have a check register, or you can say it's a report which lists all the checks which you issued for a particular period. Or you can also see byproduct of batch processing. You can say it's actually a byproduct of the batch processing. When you process the batch, you can see it. And there is another important thing, that the check register basically could be vendor wise as well. We said here the period wise, that maybe for the month of June or the month of July. But when I say vendor wise, so if you are dealing with two or three vendors, so you can generate the check register about them. That, let's suppose company ABC is giving you goods, so you can check that how much goods you have received from them, and how much checks you have issued to them, how much pending payments you have for them. Then we can also generate the discrepancy report. Discrepancy report is about the damaged goods. If, let's suppose, you have purchased the goods from the vendor and some of them are not up to the mark, or are not according to your requirements, so they are entered in the system, that why you are returning the goods. So discrepancy reports these are the notes about different quantities and amount, if you find out. And how do you get the discrepancy report? Because you enter the data in the system, and based on that, this report is generated. So it is based on the reconciliation. When you receive the goods, you match it with the purchase order, the receiving report, and the purchase invoice. All these documents, when you match with the physical good, you can find out that how much differences are there. Also, you can forecast about the future payments, that how much money you are supposed to make the payments in the future for these purchases which are on credit basis. So this is the end of two business processes which we were supposed to discuss in this chapter. Now let's take a feedback, or you can say a review, that how the IT can help in sales and purchasing. So basically, now most of the inputs are electronic, because of the wireless capabilities. We don't most of the documents are in the soft copy, so they could be connected with the system, and by reading those codes we can enter the data in the system. So automated data entry technology is there now in IT, and we discussed biometrics in our previous topics in more detail. We already discussed that. Inventory management systems are there, which are having the ability to read RFID tags. If you see any company, or you can say in any workplace where you are working, you will find out that different items, or the furnitures, or different stock items, they have a code on it which tells that when was it purchased, and it has some some coding. So when you read that coding with the help of machine, you can find out the details about that inventory item. This is all possible because of the IT, or you can say because of the use of IT in the sales and purchases process. Now, what are the current trend in the business processes? So now most of the business processes are being outsourced. There is offshore businesses happening. Businesses are not doing all the stuff. One company is not doing everything by itself. Like, let's take the most common example of hiring. Every company does not do the hiring by itself. It has some companies who hire the employees for them. So rental services are there, or you can say HR services are being outsourced, IT services are being outsourced, maintenance services are being outsourced. So businesses are now working without boundaries. This is known as business processes outsourcing. Business process management softwares are also very helpful because they collect the data, and they help us in maintaining different business rules. They help in using the business processes, or maintaining the business processes, or working or accomplish the business processes more efficiently. So this is all about the first part of the business processes, which is in one chapter. Then I will be discussing some more business processes in my next recording. And at that time, in this topic, we have discussed about two business processes. But when I will come back with another recording, at that time, I'll be talking about human resource processes, fixed asset management processes. We will also see the production process. So all of them are going to be the part of our next discussion. Till then, take care everyone. If you have any concerns, anything is confusing you, you can write me in the comment section and I'll be answering you. If you want to listen about the next recording whenever I upload them, and you want to get an automatic notification, so please subscribe the channel so that you can know about the upcoming videos which I'll be uploading for you soon. Take care everyone. Have a great day. Bye everyone.